gold is doing something it hasn't done in half a century.
The price of gold is near an all-time high, more than doubling in the past 5 years.
U.S. gold reserve surpasses more than $1 trillion in value.
It's not just going up, it's breaking out. Prices are at record highs, and physical inventory is running into issues. Central banks, the same institutions that once abandoned gold in the past, are now quietly buying more of it than at any point in modern history.
The last 4 years, we've seen record amount of gold purchases by central banks.
At the same time, countries around the world are dumping U.S. treasuries. Tensions between the U.S. and China are also at all-time highs. And a new kind of global alliance, the BRICS nations, are openly talking about building a new currency called the unit. This unit could be backed by gold, or maybe even something even better. So what's really going on here? Is the world actually trying to move back to a gold standard? And if so, how would that even work? If these are the types of conversations that excite you, be sure to click the link in the description to join my community. You're going to get access to a group of like-minded individuals having these kinds of conversations in real time, and you'll have the opportunity to go over what is happening to the global economic system and what to do about it on live calls. My name is Keith D, here to talk everything money and markets. Let's dive into what is happening with gold right now. For most people, this story starts with something personal. Life is getting harder. Inflation has systemically eaten away savings, and home ownership at this point in many places around the world feels completely out of reach. We have birth rates in some of the leading economies collapsing. Governments are begging people to have children in some of these same places. And the thing is that if there's no babies, there's no growth, and no growth means no taxes. So right now, every government solution really looks the same. The idea is to print more money, creating debt, and hoping that the machine just keeps running. But the truth is that this is starting to break. This all accelerated when the world left the gold standard back in the 1970s. That was the moment that money lost its anchor, when value became whatever a government said it was. Fiat, from Latin meaning let it be so. And maybe that system has finally reached its breaking point. In late 2024, something strange started happening in the London gold market. Vaults that had always been flush with supply suddenly could not meet demand. Withdrawals were backed up for weeks. Wait times jumped from just a few days to nearly 2 months. Gold was being airlifted, literally flown, from London to New York in massive quantities. Traders were closing their paper positions and demanding physical delivery. Analysts called this a technical default in the world's most important gold market. In simple terms, there were just too many claims that were paper claims for way too little real metal. And behind all of this, central banks and sovereign wealth funds demanding to hold gold, not just trade it. And around the same time, a familiar tension was returning to global trade. The US had just elected Donald Trump again, and his administration began threatening new tariffs on China and Europe, reopening the same trade wounds that had defined the first term. Suddenly, central banks, sovereign funds, and private institutions all were asking the same question. If this global trading system fractures again, then who's gonna really own the gold? Then came November 28th, 2024. Poland announced it had become the world's largest gold buyer of the year, purchasing nearly 100 tons as the Russia-Ukraine war dragged on. "We are entering the exclusive club of the world's biggest gold owners," said Poland's central bank governor, Adam Glapiński. His goal? To raise gold to 20% of Poland's total reserves, a figure that would be unthinkable just a decade ago. Across the border, the Czech Republic was doing the same. Its central bank governor had already increased the country's gold holdings fivefold since taking office in 2022. He said, "We need to reduce volatility. And for that, we need an asset with zero correlation to stocks. And that asset is gold." By late 2024, the Czechs held one of the largest reserve piles in the world relative to GDP, about 150 billion in foreign reserves, nearly half the size of the entire Czech economy. Hungary, Serbia, and others followed suit. One by one, Eastern European nations closest to the flashpoints of global conflict, began converting paper wealth into metal. By early 2025, the price of gold had exploded to over $3,200 an ounce. Silver has followed closely behind, and for the first time in decades, people are beginning to wonder if this was more than just a movement in the market. What does it mean when everyone wants to get their hands on physical gold? Maybe we're experiencing the symptoms of a complete monetary reset. Across the world, the BRICS nations, Brazil, Russia, India, China, and South Africa, and more now, have been preparing for something big. Collectively, they now hold over 6,000 metric tons of gold, which is close to around 20% of all the world's official central bank reserves. Russia and China lead the charge, not just hoarding gold, but building new financial rails around it. As Andre Zick pointed out in his most recent video about this, in China, the Shanghai Gold Exchange has become the largest physical market in the world. And there's this idea that China is constructing what is called the Gold Corridor, a network of vaults across BRICS countries, potentially setting this up to be able to allow nations to redeem the Chinese yuan for gold. The idea might be simple, but it is extremely powerful, where gold could become the new collateral of the global financial system, a way to bypass the dollar and the Western banking structure entirely. If successful, this would mark the first real challenge to US financial dominance since the end of World War II. But how would a system like that actually work? Under the gold standard, every dollar represented a fixed amount of gold. You could literally exchange your money for metal. That created stability, but there was also limitation to that. Governments couldn't just print more money than they had gold to back it until they did, and that system collapsed. When the system broke in 1971 and global finance entered its fiat era at the time, an age of credit, leverage, and debt-fueled growth. To get back to a gold standard, there would be one major challenge. That would be the revaluation of gold. In order to catch the price of gold back up to all of the monetary debasement that has occurred since we left the gold standard in the 70s. Revaluing gold isn't just about speculation of the price, it's about creating solvency. Let's do some of the math. The US alone holds around 261 million ounces of gold. Against a $37 trillion national debt, that means each ounce would need to be worth around $142,000-ish just to fully cover the debt with gold reserves. Now, if you wanted to take a more conservative view of what exactly the gold would be there to back, not federal debt, but maybe the total money supply, you'd get something closer to $45,000 to $75,000 per ounce, depending on how much of the system you want to back with gold. In other words, if governments ever tried to make their balance sheets whole again, using real assets instead of credit, the price of gold would have to be revalued by an order of magnitude. This kind of shift would upend global wealth distribution overnight. So a full gold standard? Probably not. But a hybrid? That's a different story. Here's what I think is more likely. A world that blends the old and the new. A digital commodity standard. Maybe some forms of gold-backed stable coins. Some sort of digital settlement layers that use tokenized metal as collateral. Central bank digital currencies that reference a basket of assets. Maybe gold. Maybe other commodities, maybe Bitcoin. As former Trump economic advisor Judy Shelton once stated, a gold standard could be used in a cryptocurrency kind of way. And in a strange twist, this may already be happening. Over 90% of the world's central banks are developing CBDCs. Meanwhile, while governments like the US and China are both quietly holding massive Bitcoin reserves, both nearing 200,000 Bitcoin each. Maybe gold isn't competing with crypto. Maybe it's about to be merged with it. A new form of money that combines trust in physical assets with the efficiency of digital systems. Whether we move into some pure gold standard, a mix that uses stablecoins, or CBDCs, or one that is mixed with volatile assets like Bitcoin, Ethereum, or XRP. If this kind of shift plays out, the world could see the greatest transfer of wealth in decades. The dollar would still exist, but its dominance would fade. Paper promises would lose value, and hard assets, and provably scarce assets, will be the standard. Gold, silver, cryptocurrency, anything that cannot be printed. And as one of my community members said during one of our live calls, whatever looks the least like fiat currency probably has the best chance of surviving this era. No one knows exactly what's coming next, but one thing is clear. The system is changing, and the best thing that you can do is make sure that you are not stuck playing an old game while the rules are rewritten in real time. The only way to keep up with the changes that are occurring are to have assets that go up in price as the value of dollars around the world collapse. The old paradigm, where it actually made sense to stuff money under your mattress for a rainy day, has gone. Any dollar that's not in markets working is losing purchasing power in a world where the system is designed to take money away from you. The sad truth of this is that this also means that people must take risk in order to just keep up. This creates an economy where you're constantly on edge, wondering whether or not the stock market is going to crash. But if it doesn't, you're screwed. Something has to change. What that's going to look like, we will only be able to speculate on for now. If you want to keep up with what is actually happening beneath the surface of the global economy and the headlines, these are the discussions that we're having inside of my community. Click the link in the description to join the community for free, and from there you'll be redirected into our private community where you will have the opportunity to join live calls where we break down these shifts in real time and help you think about the different strategies that you can use to take advantage of the opportunities as they arise. I'm Keith D, here to talk everything money and markets. And if you enjoyed this, be sure to like and subscribe and let me know what you think is actually happening in the comments down below. If you want to join in on a long form version of this conversation, be sure to check out the Memes and Market Show, where I'm going live with Ben Levitt every Tuesday and Thursday at 12 p.m. Eastern. You can check that out in the description below as well. Until next time, peace.